It is Thursday, January 29th, 2026. And today we really need to talk about what is, I guess, the operating system of the global economy. We're looking at SAP.
Hmm.
They just dropped their Q4 earnings. And, if you just look at the raw financial statements, it looks like a total victory lap.
Oh, absolutely. I mean, if you just skim the headlines or the summary table, you see a company that is just firing on all cylinders.
Right.
They beat their operating profit targets. They smashed their free cash flow goals. They even announced a 10 billion euro buyback program.
Which in the corporate world is basically the universal signal for we have more money than we know what to do with.
Exactly.
So you'd expect champagne corks popping, you'd expect the stock chart to be, a vertical green line, but that's not what happened.
No, not at all. The market opened and SAP got slaughtered. I mean, the stock plummeted over 15% in minutes. It was a massive sell-off.
Okay, so record profits, a 10 billion euro buyback, and a 15% crash all at the same time. That is a massive disconnect. It feels, I don't know, almost schizophrenic.
It's a tale of two realities, really. You have the short-term trading algorithms reacting to one thing, and then you have this huge long-term strategic pivot happening in the background.
Okay, so that's our mission for this deep dive. We need to play detective. We have to figure out why Wall Street freaked out, whether they were wrong to panic, and then look at the much bigger story buried under all that rubble, which is this massive pivot to business AI. So let's start at the crime scene. What's the smoking gun here? What single number causes a company to lose 15% of its value when it's beating profit targets?
It is an acronym that basically dominates the lives of software CFOs.
CCB.
CCB, the current cloud backlog.
Okay, let's strip away the jargon. I know backlog sounds like work you haven't done, but in software, that's a good thing, right?
Right.
What are we actually measuring?
Think of it as the guaranteed money. It is the revenue SAP expects to recognize, specifically within the next 12 months, from cloud contracts they've already signed.
So it's locked in.
It's locked in. Wall Street loves it because it removes all the uncertainty. It's not a guess, it's a schedule. It's the closest thing an investor has to a crystal ball for the next year.
Okay, so it's the immediate pipeline. And I'm guessing the pipe was leaking.
Not leaking, just flowing a little bit slower than the algorithm wanted.
How much slower?
Well, SAP had forecasted that this backlog, the CCB, would grow by 26%. And when the print came out, it was 25%.
Wait, hang on. You're telling me we're talking about a 1% miss?
1%.
The stock drops 15% because they hit 25 instead of 26. That feels incredibly neurotic.
It is neurotic, but you have to understand the psychology of, high-growth software valuation. It's all built on momentum. A 1% deceleration can signal a trend.
Is the growth engine sputtering?
That's the question they ask. But this is where the deep dive gets interesting, because if you actually read the transcript of the call, that 1% miss wasn't caused by losing customers. It was caused by the structure of winning them. That sounds like corporate spin. We didn't miss, we just won differently. I mean, what does that actually mean?
It's a fair skepticism, but the details, they actually back it up. CEO Christian Klein explained that Q4 was all about mega deals. We're talking about massive, complex migrations for giants like Adidas, L'Oreal, and the H&M Group.
Okay, but landing Adidas is a huge win. I don't see the problem.
It is a massive win. But think about the logistics. You don't just migrate a company the size of Adidas to the cloud over a weekend. These contracts have what are called back-ended ramps.
Back-ended ramps. Okay, explain that.
So imagine you're signing a huge lease on an office building, but you need 6 months to renovate it before you actually move in.
Right.
You might negotiate a deal where you pay very little rent in year 1 while you're doing the construction, but then the rent triples in years 2, 3, and 4.
Got it. So the total value of the contract is huge, but the year 1 payments are small.
Exactly. And remember, the CCB, that metric the market freaked out over, it only looks at the next 12 months. So since the big money from Adidas or L'Oreal hits in, say, month 18 or month 24, it is completely invisible to that specific metric.
So it's invisible money, it's signed, it's legally binding, but the metric just can't see it.
Precisely. And then you add the government factor. This was the other half of the so-called mess. They signed massive deals with the U.S. Navy and the U.K. tax authority, HMRC.
The U.S. Navy, last I checked, they have a pretty good credit rating. They tend to pay their bills.
They do, but government contracts almost always require a specific legal clause. It's called termination for convenience.
That sounds ominous.
It's a standard for defense in the public sector. It basically means the government can technically cancel the contract at any time for any reason without cause.
Okay.
No, it almost never happens with big ERP systems, but because that clause exists in the fine print, strict accounting rules say you cannot count that revenue in the backlog until it's actually billed.
So let me get this straight. The U.S. Navy isn't going to just switch their entire logistics system next Tuesday. They're locked in for all practical purposes.
Mm-hmm.
But because they could theoretically cancel, the spreadsheet has to treat the revenue as zero.
You nailed it. It's an accounting gap, not a business gap. So you have this bizarre situation where the stock tanked because SAP signed deals that were either too big to start billing immediately or too governmental to be counted by the auditors.
It's almost ironic they're being penalized for winning deals that are too strategic.
And if you zoom out from that one metric, the total cloud backlog,
Uh-huh.
which includes all the money signed for the future, not just the next 12 months, that actually grew 30% to a record 77 billion euros.
77 billion.
That's the real health of the business. The short-term metric missed by 1%, but the long-term pipeline is absolutely exploding.
Okay, so if I'm an investor, maybe I take a deep breath. The panic seems like an overreaction to accounting rules. But let's pivot, because the CEO, Christian Klein, he didn't seem to want to spend the whole call just apologizing for backlog definitions.
No, he didn't.
He wanted to talk about the revolution happening inside the product.
Yes, the business AI pivot.
Now, I have to be a skeptic again here. I mean, every CEO on the planet says AI 50 times a call these days. It pumps the stock. Was this just buzzword bingo, or is there actual substance to what SAP is doing?
There's a very specific argument they're making,
Yeah.
and it actually challenges the current narrative about AI models. You know how everyone is obsessed with ChatGPT and Gemini, these massive large language models?
Sure, the bigger the model, the better. That seems to be the race.
Well, SAP is saying non-business.
Okay.
Their whole thesis is that a generic model is actually dangerous in an enterprise setting because it lacks context.
Okay.
Klein told this story about a German customer that really drove it home for me.
Oh, I saw this in the notes. This was the aha moment for me, too. Walk us through what happened.
So this unnamed German customer tried to build their own AI agent. They wanted to figure out a classic problem. Why aren't our invoices being paid?
The age-old question. Where is my money?
Right. So they took a standard LLM, probably GPT-4 or something similar, and they fed it all their emails, their Slack messages, their support tickets. They thought the answer has to be in the text. And it failed completely. The AI could write a very polite email asking for payment, or it could summarize the angry emails, but it couldn't figure out why the payment was blocked. It was hallucinating reasons or just giving generic apologies.
Because the answer wasn't in the emails.
Exactly. The answer was in the ledger. The answer was in the inventory data. The LLM had no idea that the shipment was stuck in customs, or that the bank transfer had a matching error, or that the deal status was flagged in the CRM.
It's like hiring a poet to solve a forensic accounting crime.
That's the perfect analogy.
The poet writes beautifully, but they don't know how to read the bank statement?
Exactly. So SAP comes in and connects the AI to their business data cloud. And suddenly, the AI isn't just reading text. It's seeing the supply chain, the bank feed, the contract terms, and it solved the problem instantly.
And what was the result?
The customer actually deleted 200 predictive code modules they had spent years building themselves.
Wow.
They just didn't need them anymore.
That's profound. They deleted their own legacy code because the SAP AI just handled it.
That is their moat. SAP's argument is, we have the boring transactional data that makes the fancy AI actually work. An LLM without business data is a toy. An LLM with business data is a machine.
And are customers buying this, or is it just a nice demo?
The adoption numbers are pretty startling. In Q4, 2/3 of all their cloud orders included this business AI.
2/3.
And if you look at their top 50 deals, that number hits 90%.
90%. So if you are a big company buying SAP today, you are almost certainly buying their AI. It's basically becoming the default.
It is. And the usage of Joule, that's their AI copilot, it grew 9-fold over the last year. So it's moving from experimental to essential.
And they gave some concrete examples, right? It's not just for chatting.
Oh, far from it. This is about efficiency and the boring, expensive parts of a business. Take Siemens, for example. They rolled out Joule for consultants. They're estimating their consultants are saving 25% of their weekly working time.
25%. That's a day and a quarter. Every week.
Just imagine what that does to your margins. If you can reinvest that time into higher value activities or just bill more hours on complex tasks, the ROI is massive.
Yeah.
Or look at H&M. They aren't just using AI for customer chat. They're using it to reimagine returns, claims management, supply chain predictability.
So it really reinforces this idea that for enterprise AI, context is king. It's not about writing poems, it's about connecting the invoice to the inventory.
That's the equation. Business data plus AI equals solving expensive problems. And SAP is sitting on more business data than almost anyone else.
But here's where it gets really meta. And honestly, this was the part of the report that made me put my coffee down. They aren't just selling this to Siemens and H&M, they're doing a massive overhaul of SAP itself.
Right. They're eating their own cooking, as the saying goes.
There was one statistic about their developers that I need you to confirm because it sounds like science fiction.
I know exactly the number you're going to cite.
35%. Christian Klein said 35% of SAP's code is now auto-generated by AI.
It's staggering. I mean, think about that. One of the largest, most complex software companies in the world, the company running the global economy, is having over a third of its product written by machines.
But does that worry you? I mean, if I'm a bank running SAP, do I want code written by a bot managing my transactions? Is it safe?
That's the big question. But Klein was very specific about how the role of the human developer is changing. He explicitly said the job is no longer writing code. The job is designing, guiding, and validating.
So the human becomes the editor-in-chief, not the writer.
Exactly. The human is the architect and the safety inspector. The AI pours the concrete. And financially, this efficiency is what allows them to generate so much cash.
They mentioned a specific savings target.
A big one. They're targeting a run rate of 2 billion euros in cost efficiencies by the end of 2028.
2 billion euros. Now, usually when a corporate executive says efficiency and AI in the same sentence, it's a euphemism for you're fired.
Correct.
But they claimed otherwise.
They did. The CFO, Dominic Assam, he was adamant. There was no restructuring program announced today, no mass firings. Their plan is to keep the headcount flat, roughly 100,000 people, but grow the revenue by double digits.
So they want to do way more work with the exact same number of people.
That is the holy grail of economics.
Right.
Infinite scaling without linear cost growth.
Yeah.
If they pull it off, it justifies the stock price, regardless of any backlog mess.
It sounds great for shareholders. I'm still wondering what it feels like to be an entry-level coder at SAP right now, realizing a bot is doing 35% of your job.
It definitely changes the career path. You have to move up the value chain immediately. You can't just be a code monkey anymore. You have to be a system thinker.
Okay, so we have the accounting noise, we have the AI revolution, but there was one more cloud hanging over this report. And it wasn't a computing cloud, it was a geopolitical one.
Yes.
Yeah.
You just can't ignore the state of the world right now. Wars, tariffs, trade tensions. It's a mess out there.
And SAP operates everywhere. How does that impact them?
Well, it creates friction, but it also creates a new product category. The CFO mentioned that customers, especially in government and defense, but also in other sectors, are getting very nervous about where their data lives.
Right. If I'm the German government or a French defense contractor, I don't want my data sitting on a generic server in Virginia.
Exactly. You want digital borders. You want your data in a bunker in Munich, subject only to German laws. This is the whole concept of the sovereign cloud.
And this links back to the backlog issue, doesn't it?
It does. Negotiating these sovereign deals takes a long time. You have to navigate local laws, certifications, data residency requirements. It slows the sales cycle way down compared to just clicking buy on Amazon Web Services.
So the messy world makes it harder to close deals quickly.
Yes, but, and this is a big but, SAP views this as a competitive advantage.
How so?
Because they are already local. They operate in over 120 countries. They have been dealing with German labor laws and Brazilian tax codes for decades. The U.S. hyperscalers, the Amazons and Microsofts of the world, they often struggle with these hyper-local sovereignty requirements.
Right.
SAP is basically saying we could be German in Germany, Chinese in China, and American in America.
So while it slows them down in the short term, it makes the customer incredibly sticky.
So once you go through the pain of setting up a sovereign cloud for your defense department, you are not going to switch vendors next year. You are locked in for a decade. It creates a deeper, more strategic moat.
So bringing this all back together, we started with a stock crash. We have a 15% drop because of a 1% miss in a short-term backlog metric.
A miss that was caused by landing massive, complex deals and government contracts that just don't fit neatly into a 12-month spreadsheet.
Meanwhile, the company is fundamentally rewiring itself. 35% of their code is written by AI. They are targeting 2 billion euros in efficiency. They are seeing 90% AI adoption in their biggest deals.
And they're on track to generate 10 billion euros in free cash flow next year. It really feels like a case of the market looking at the next 3 months while the company is building for the next 10 years.
It's the classic tension, isn't it? Wall Street wants these nice linear lines on a chart, but real transformation is messy.
And this transformation is so significant. You have to remember, SAP isn't just another tech company. It's the operating system for global commerce. When they change how they work, it ripples through supply chains, manufacturing, retail, everywhere.
That is a great point. And it leads me to one final thought I wanted to bounce off you. We talked about SAP automating 35% of their own code. We talked about Siemens consultants saving 25% of their time.
Right?
If the company that builds the software running the global economy is changing how work gets done this drastically, what happens when that same efficiency is rolled out to the 40% of the world's commerce that touches an SAP system?
That is the multi-trillion-dollar question. We are moving toward what you might call the autonomous enterprise. Right now, we get excited about a chatbot answering an email. But if SAP succeeds, we're talking about supply chains that self-correct, financial books that close themselves, and code that updates itself.
Are we ready for that?
I don't think we have fully grasped the magnitude of it yet. But if SAP's internal transformation is any indicator, the speed of change is going to be much, much faster than anyone anticipates.
Well, on that slightly terrifying but also exhilarating note, we will wrap up this deep dive. It's just fascinating to look past the stock ticker and see the actual machinery of the economy changing gears.
Absolutely. The numbers tell one story, but the technology tells a much bigger one.
Thanks for listening, everyone. We will catch you on the next deep dive.